All right, welcome back. It's me, JaviFX, and we are here with educational content. All right, so one of our members asked us exactly these three questions after being successful with their method, but they want to improve even more. All right, so basically, I want to share it with you guys on YouTube, so it's a win-win. Everybody learns from what I'm about to say. All right, so the first question was how to pick the right entry. Sometimes I pick a good entry, but it keeps failing, and I could have picked an even better one. Number two, when is my trade invalidated and where do I set my stop loss? And lastly, how do I take profits within my setup? How do I identify each level? All right. So I'm going to try to answer each question and try to put them all into one, you know, cheat sheet. All right. So how do I pick the right entry? All right. So let's do something real quick for you guys. Okay? So the first thing you have to do is identify what trend you are in. I believe this is the most important thing when first setting up a trade because if we are in a bull trend, therefore, what we do, we long. And if we flip the switch, if we are in a bear trend, what we do, we short. And if we are in some sideways action, some sideways price action, then we try to, as much as possible, trade, you know, the range, right? Ping pong from range low, range high, range low, range high. This is the hardest, but that's basically what you have to do, all right? So you have to get your foundational market structures in place. Higher highs, higher low, higher high, higher low, higher high. Lower high, lower low, lower high, lower low, lower high, lower low. All right? So, with this in mind, you would know exactly what trend you're in. Okay? So, that's immediately step number one and 80% of what we have to do. Okay? Next, we trade supply and demand zones. Almost exclusively supply and demand zones. The demand zone is something that caused a break of structure to the upside in a bullish market. Okay? Think of demand zone as a glorified support level. So when price goes to support or into a demand zone, you expect them to go higher. Now conversely, a supply zone, let me just write that down for you guys. Demand and supply. Okay? So supply is resistance, basically, glorified resistance. And as we all know, when price goes to resistance, we expect lower prices. Okay? So this is the first part of the equation. And next is, well, if we are able to get in at the moving averages, that's absolutely beautiful, right? If our demand sits at a moving average, that's the best. Or if a supply zone goes with the moving average, it's also the best, all right? Okay, now let's demo it. I have three charts for you guys. Bitcoin, Aster, and Sol, all right? And we'll get through these number two and three all in one. Okay. So quickly, let's look at the Bitcoin chart only 4 hour. Okay. So if you can, take a look at this, can you tell me if this is a bullish or bearish trend? Well, it's technically bearish. We're below the moving average, below the moving average. This destroyed all of this liquidity, all of the bullish momentum, broke structure, broke structure, broke structure. We made a new low, right? We made a new low. That's it. So we made a lower low. Remember the diagram that I showed. A lower low, a lower high, and another lower low. In this term, these recent price action. Well, this was very manipulated. I would say this is technically a lower low, right? So this was an attempt. This one was an attempt at a higher high. Okay, a higher high and a reclaim of the 4-hour moving averages. However, when a higher high is not met with a higher low, therefore that just becomes a manipulation or a sweep. So you can also view this as some kind of short-term range, something like that. And technically something like this, or you can even go lower, like that. Then this is still technically trying to get us back into the range, but it's unsuccessful. Okay. So the easiest thing to look at is, are we above the moving average? Or are we below the moving average? Okay. So quickly, right? Quickly, we have a few trades on our hands as is. Okay. So to answer this, where's that? How to pick the right entry. Okay. So at this particular point in time, we don't know what's happening just yet. Okay? Our true breakup structure to the downside is this. This one. So if we want to try to get an entry, okay, we have this. Remember what I told you. If a supply zone, okay, or resistance sits right at the moving average in a bearish trend, then that's very high probability. However, we did not get that. Okay? Absolutely fine. Okay, so let me just quick crash course you guys on what demand zone and supply zone is. All right. So demand zone, let's use this as an example, this one. A demand zone is basically the last, okay, the last candle before an impulsive move that caused a break of structure. Right? Beautiful. Now, impulsive move means it leaves behind imbalances. All right. So you can use that exact same principle with a supply zone. So a supply zone is the last candle before an impulsive move that caused a break of structure. Okay? There is an imbalance over here. So this is a valid supply zone. Okay? Beautiful. Now, here's the problem. You created another lower low. Okay? And we've identified another supply zone. Beautiful. So, right then and there, I present to you guys an entry at the supply zone. And you can set your stop loss above some kind of liquidity, right? And two ways to play this. You have two types of targets. We want an immediate lower low. That is a good target, immediate lower low. Or if looking at the structure in general, okay, we've broken this, we're creating lower lows, we've failed to create a higher high and higher low. Therefore, what are we going after next? Points of liquidity. What are points of liquidity here? This low is liquidity that got taken. Now it went back up to supply zone. Are we short? Where's the next point of liquidity? Over here. right? This low is a good liquidity area to take profit. Taken already. But now, this is next a good liquidity target. So right then and there, we have ourselves a trade. Okay? Beautiful. Very beautiful. Okay. So we've answered 1, 2, and 3. Supply zone, perfect. Stop loss is right above that supply zone. Okay. How do I take profits? Okay. I gave you guys a few options here for take profits. A lower low, a fresh lower low, that's a good take profit zone. Next, liquidity points. Liquidity points could be old lows or equal lows. Okay? Very good. Now, this is the easiest way to enter a trade. This is on the 4-hour time frame. Okay? So as you go higher time frame, your stop losses widen, therefore giving you a risk reward of a little bit lower. But your win rate increases. Okay? But if we go to the 1 hour or anything lower than that, okay, then suddenly we are able to further refine our entries, which I will get to in a while. Okay? So here on the 1 hour, price actually touched the moving average. Again, what did I say? If our demand and supply zones fall onto the moving average, then it's a very high probability. And guess what? If you saw price go here and you wanted to refine it for a better risk to reward, guess what? You could have done it like this. Boom. Suddenly, you wanted to enter off of this react. Something like this. All right. Let me just. There. So you saw that price reacted inside the 4-hour supply. It reacted to the moving average and it failed. It rejected, therefore that's my sign to enter at the rejection candle and using the same stop loss. Suddenly my 4.5 risk reward becomes 11.84. So that's a beautiful, beautiful trade, right? So that's how we use lower time frames. Now, problem with lower time frames is you can get stopped out. All right, you can get stopped out. Well, you actually get more frequently stopped out because your stop losses are more, a little less than the higher time frames. Like the higher time frame was 1.76% and it became 0.75%, and sometimes you get wicked out, or sometimes you just don't get into your entry at all. All right? So, let us look further and analyze. Okay? So let's say you missed this. What now? What now? Let's say you missed this entry and you're looking to re-enter again because you tell yourself, I don't want to trade on a weekend. What can I do? I have the perfect answer for you. All right. So, we can get in at lower lows, lower highs, lower lows, lower highs. So, if you look at this is a lower low. This is also considered a lower low. All right. So now, what are we looking for? We're looking for a lower high. And guess what? We have a beautiful, beautiful supply zone over here. So now, suddenly, we have another entry. Now, this is what you call the refined entry on the lower time frames. So, same trade, right? Something like this. Exactly the same trades, but this makes you more bank than this, just because your stop losses are refined. But again, only 4-hour, I'm not seeing much. In 4-hour, I have a supply zone over here. So what's stopping this from just shooting up and going down? Nothing. So that's the risk you have to take when you trade on the lower time frames. We have good risk to reward. Yes, we get more money, but the chances of you losing is also higher. All right, very good. Now we can also look at it from this angle. We have a supply zone over here. Why is it a supply zone again? We broke this. Okay, the impulsive candle and a fair value gap or an imbalance. So I wouldn't be surprised. Could have just entered here and we just make a new low. Wouldn't be surprised. Okay? Wouldn't be surprised. All right. Now let's look at another trade over here. A few trades actually that I deem quite good. Okay. So this is Aster. This was a trade that I signaled back in September. On the 1 hour, by the way. Well, it's very simple. A very simple trade. We continue to make higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher high over here. We broke structure over here. Now it's time to look for areas where demand zones can form. And we have one right over here. The last candle before this impulsive move, right? So higher low and a target at a higher high. Okay. Now, if we use a little bit more recent price action, here we go. So what happened here on this October 10, the dreaded October 10 cascade? A break of structure, major break of structure at that. Guess what? We have a supply zone. Uh-oh. What happened when it touched the supply zone? Uh-oh. It absolutely dumped. But this risk reward is very low, so I may have not taken this. What I would have taken is this. Guess what? Another break of structure. Another lower low. Uh-oh. A supply zone. Perfect for a short. Now you can target just a new lower low. Just this recent lower low. Or, again, since we've confirmed that we want to go lower, what is stopping us from taking this liquidity over here? Nothing is stopping us. Boom. Take profit. All right. Now, let me give you guys an example of using the lower time frames can get you stopped out. So let's say you missed this. You were asleep at 8 a.m. by 12 p.m. You were asleep or you were at work, whatever. And you wanted to get in again. So we have here a new fresh lower low, and I would have entered from here at this supply zone, and guess what? I would have gotten stopped out. I would have gotten stopped out and eventually go to my target. So, if you get stopped out and price does this, it's not the end of the world because guess what? We broke structure again. So that candle that caused this, manipulation was eventually broken down. So this could be some kind of manipulation. So next, the entry, guess what? Sniper entries once again on our supply zones. you're gonna again target this. Boom, right? Very simple. Very simple. Right? Very simple. If you know the trend, it's very simple. Now here's the thing. Guess what? Um, this was the CZ manipulation telling everybody that all right, we're buying. Okay? And guess what again, guys? We broke structure again. We have a supply zone here and we seem to be dancing around, right? I don't know, I can't tell for sure, but this is a valid setup. Right? Maybe you say, "Oh, I'm tired of shorts." All right, well, guess what? I have a beautiful trade over here. All right, let me show you guys. Okay, now we're getting some breaks of structure to the upside, showing signs of strength. And another break of structure here. Again, what did I say about the moving average plus demand or supply zones? Boom. We have one right here. All right. Now you can tell me, aren't we bearish? Yes, we are. Yes, we are. And didn't we identify a supply zone? Yes, we did. Yes, we did. Now, to answer, how do I take profits? Let's say you tried to go counter the trend. You tried to be bullish in a bearish market. What you can do is you can long to short. Right? What did I say? We have a supply zone here already waiting for us. And what's stopping us from playing the lower time frames? Right? If we see bullish momentum on the lower time frame, but it's within a bearish scenario, we can take profit realistically. Right? Why would I do this? Why would I try to target a higher high if we're bearish in the first place? What we can do is long into a supply zone to short. Simple as that. Right? Simple as that. Although obviously, right, the trend is your friend and it doesn't always work. Okay, let me give you guys a scenario of this not always working. So here we have identified a supply zone over here. Right? Simple. Now if you want to use that strat, okay, for some reason I want a long because this is a break of structure over here. For some reason. The break of structure. I want to long this. And you just get stopped out. See, the context is very important here. Just because this is a valid demand zone at the time being, context has to be applied. Right? So this is a demand zone that broke this structure. However, the overall trend is bearish. Therefore, we favor shorts. Okay? Simple as that. Let's go to my last trade of the day. This video is getting quite long, but let's go for it. This is a good example of how you can be right, but price just isn't in your favor. Okay. So on the 4-hour, clearly bearish, right? This is the 4-hour moving average, and we're clearly projecting. Okay, so a good entry on the 1-hour time frame, despite here's something I want to teach you guys. Despite technically being in a bullish moving average trend, the higher time frame is obviously respected even more. So I would take a 4-hour trade more than a 1-hour trade any day because of the hierarchy of time frames. Obviously, the weekly has better direction than the daily, and the daily has better direction than the 4-hour, and the 4-hour has better direction than the 1-hour. So, hierarchy of time frames. So if the 4-hour is bearish, then everything else should be bearish. So which takes me to my next point. All right. So here we have broken structure. Now, right here. Because if we were to continue pumping, then this demand zone should hold, but it didn't. And now support became resistance, and we have ourselves a supply zone over here. And now it looks like we have a good trade in our hands again. Now here on Sol, if you weren't in this specific trade, you had no chance of getting in again. So again, we have liquidity targets. And honestly, this is also a good liquidity target that eventually got hit. So that's a 15.85 RR trade. Beautiful. Beautiful. Okay? If you missed this, well, guess what? It never went to our supply zones ever again. Unlike Aster, unlike Bitcoin, where price pumped a little bit further where you can get in. But now, Sol never let you get in. The only trade that you would be in is this. Targeting this low here. That's it. So here's an example of you can be right direction wise, but then execution is a different beast. Or let's make it even worse. This is why I make stop losses a bit, wider, gives you leeway. Because guess what? If you're a greedy bastard and you wanted like the max risk to reward possible, well, the market finds its way to humble you down. Something like this. If you did not give leeway for your stop losses, guess what? You would have been stopped out before a 20x, 21x, right? Harsh truth, but this happens a lot. So this is the downside of a lower time frame entry. It's a double-edged sword. High risk to reward, but sometimes you get stopped out before the move. All right? So I hope this answers your questions, guys. How to pick the right entry. I gave you guys 3 coins with different scenarios, different charts. All right? Where is my trade invalidated? Where do I set my stop loss? I gave you guys exactly where to put it with the context of a demand zone and a supply zone. How do I take profits? I gave you guys, if we are following the trend, how do I take profits following the trend? Watch the video. If we are countering the trend, how do we take profits? Again, it's all here. So basically, that's it. If you enjoy my content, if you enjoy what we do here in Velaris, well, sign up here in the Discord in the link, the description below, and I'll see you on the inside.